Okay, so this next video lecture is still the continuation of our module number 1, Basic Principles of Taxation. So we are now in the fifth topic, which is about the situs of taxation. So basically, when we say the term situs, this means the place, okay, place of taxation. In this case, normally, taxes, as mentioned earlier, the government can only impose taxes within its jurisdiction. Okay, and then the question there is, how does taxation is imposed if you are residing in one municipality and you are earning your income in another province, for example, or region. Okay, so here, with respect to the place of taxation, sometimes there are double taxation that takes place. Okay, what do we mean by double taxation? So when we say double taxation, this is taxing twice by the same taxing authority within the same taxing jurisdiction or the same taxing district for the same purpose of the same year or taxing period and of the same property, meaning these are as property or income of the person that is being taxed twice. That is double taxation. So actually, in our tax laws, double taxation, this is not prohibited, meaning it can be possible that you will be taxed twice. But what are the premise of having a legitimate double taxation? Okay, so here, whether it is a direct duplicate or direct double taxation or indirect duplicate or indirect double taxation has been called as not to be prohibited, meaning it is allowed. So double taxation, actually, this is not unconstitutional because this is prohibited. Okay, this is allowed. So when you have a law that was enacted resulting to a double tax, you could not invoke this double taxation because it is not unconstitutional. It is allowed. The manner of attacking that law should not be based on the argument on double taxation, but you can, for example, you can refuse it on the basis of constitutional or its inherent limitation. Okay, if real property is subject to a percentage tax, for example, under the National Internal Revenue Code, and this real property was also subject under your local government unit taxes, there is no double taxation because there are two different taxing authorities. Double taxation will only be possible if the same taxing authority was imposing the same tax, okay, for the same property, for the same person. Okay, so one imposed by the state and the other is by LGU. So this example is not double taxation. Okay, so here, you may have gross receipts of the business establishment subject to income tax and VAT under our National Internal Revenue Code and business tax under the local taxation. Again, this example is not double taxation. Okay, so one is for the income and the other is for the excise. Income tax and VAT are imposed by the state and the business tax is imposed by our LGU. So in this example, again, there is no double taxation. Okay, so in a deed of sale, the sale is subject to capital gains tax and document stamp tax. Both are under the National Internal Revenue Code. So in this case, there is no double taxation because 6% capital gains tax is for the income. This is different taxes. And doc stamps is an excise tax. So these are not example of the double taxation. For the situs of taxation, actually class, if we will learn more about this in our next modules. Okay, if you are the resident citizen, if you are a resident citizen of the country, non-resident, foreigner, and where do you derive your income? Okay, so we will discuss all of this in our next module. But in this case, Situs of taxation in this module only tackles about the double taxation. Okay, meaning the taxing authorities, okay, that are imposing and what type of taxes are imposed. Okay, so please, under this topic right here, you should be able to differentiate between double taxation and taxation which are actually imposed, okay, with the same property but with different taxing authorities and different types of taxes. Okay, so these are all for our situs of taxation. So I think we can proceed with the next topic. Okay, under this module, so this is the tax and its elements and classifications. So here, the purpose of taxation, again, we have been talking about this in our previous video lecture. This is to raise fund or revenue for the government. So, of course, this is the principal or main purpose of tax. However, it has also the secondary or incidental purpose or non-revenue purposes. Our taxes, this is an implement of police power. When a tax is imposed, it can be used to regulate. Okay, it can fund. Okay, to it can fund for this type of activity of the government. Okay, in imposing the police power. Okay, another is to protect local industries also. So because in this case, actually it should be that the local industries should be given lower taxes compared to the imported goods. Okay, so imported goods should have greater taxes so that our local products will be patronized, okay, because of its lower prices and because it has lower taxes. That is an ideal thing. Another is to reduce inequalities of wealth. So that's why in our taxation, the more the income you generate, the greater your taxes should be paid. Okay. Another is this is an implement of eminent domain also, because in this case again the government will use these funds, okay, to perform its functions. Okay. So, can the power of taxation be used hand in hand in the power of eminent domain? So, eminent domain, as discussed earlier, this is an inherent power of the government to take or to purchase private property subject to payment or compensation. So, here, actually, in this case, I think that is possible because when the government will purchase a property, so I think based on the due process, okay, so depending on the amount of the property, so if there is gain on the part of the owner, so it may be subjected to capital gains tax. So again, it depends on the situation. Okay. So kinds of taxes. What about kinds of taxes? Okay. So here we have based on the subject matter. Okay. So taxes may be personal tax. Okay, an example is tax or poll tax. This is tax on the person. Or poll tax is our cedula. Okay, so this is a community tax certificate. All of us actually, if you reached proper age of 18, I think you should get your community tax every year. You should pay for that. Okay, this is personal tax. So this tax is imposed on the person, including natural as well as juridical persons who establish residency in a particular locality and made to pay this personal tax. So normally we pay it in our municipal office. Okay, cedula. Another type of tax is property tax. So of course this is tax that is imposed on the property. Third is excise tax. This tax is imposed on this tax is imposed for the exercise of a privilege of transferring property, entering into a business, or exercising an occupation. That is for the excise tax. Taxes as to who bears the burden. The first is direct tax. When we say direct tax, this is one of where the statutory taxpayer is the person who is required also by the law to pay for the taxes. Meaning, if you are the one who is earning the income, then you should pay for the taxes. Indirect tax, on the other hand, is one where the law provides that this shall be allowed, or the taxpayer are allowed, to pass this tax on or to shift this liability or burden to another person. What is an example? Example is in the business tax, like the VAT. Okay, VAT is actually a tax on the processes that you added to create a product or to create a product. So basically, VAT should be paid by the seller. However, they pass it on the buyer. So VAT is part of the purchase price. So this is an example of indirect tax in which the taxes can be passed on to another person. Okay. So another types of taxes is as to the determination of amount. Okay, for the determination of amount, taxes may be specific, meaning based on a certain manner of measurement or on the basis of weight. So this tax or this type of tax is peculiar to those products which are produced or manufactured, like the gasoline, alcohol, cigars, and cigarettes. So specific based on their amount or measurement. Next is ad valorem. So the taxes are determined based on the value, which means that based on the value of the article, meaning how much is that gain, for example, or the price of that particular product. So that will be the tax will be based on its price as well. So that's ad valorem. So another types of tax is based on the purpose. So first is general, meaning this is also known as fiscal or revenue. So the purpose is principally to raise the revenue. As there are also types of taxes which are special. So these are also known as regulatory. Okay, so this the purpose of this is to raise revenue, and it will carry an incidental or special purpose on it. Okay. Another type of taxes based on the scope or authority imposing the tax. So we have the national. So these are taxes legislated by the Congress, which are found under our National Internal Revenue Code. Okay. As well as in our Tariff and Customs Code. We also have our municipal or local taxes. Okay. So we've mentioned this before. So these are the taxes of the LGUs. Okay, either by province, city, or municipality. So another is as to the graduation of rate. So how much in terms of percentage should a person pay based on his income? So we have three different types of graduation rates. We have proportional, progressive, and regressive. So what are these types of graduation rates for income taxes. For progressive system, this is different from progressive tax rate. In the case of progressive or graduated tax rate, this is where the rate increases as the tax base increases. Or in the case of income, the more you have the more or the greater your income is, the higher is your tax rate. That is progressive system of taxation. Okay? So again, if you have higher salary or income, you will have higher percentage or higher amount of taxes to be paid. What about regressive system? Regressive system of taxation, this is the opposite of progressive system of taxation. When we say regressive system of taxation, this means that there are more indirect taxes than direct taxes. For example, VAT, regardless of your economic status, meaning if you are rich or poor, so the purchase of an item or commodity, regardless of who the buyer is, they are made to pay the same tax, right? For example, if you are rich and you will purchase gadget, you will pay the same amount. Yes, you will pay the same amount of VAT. And if the poor, for example, is also able to purchase that same gadget, so the person will also pay the same amount of tax. Okay, so regardless of your economic status or the level of income that you earn, you will pay the same tax rate. So whether you are rich or poor, you buy the same item, you pay the same item. Okay, but in other words, for a regressive taxation, there are also cases in which if you have lower income, but I think that this is not imposed in any government because I think it's not equitable. Okay, actually, when we say regressive in system of income, if you have lesser income, you have greater rate. If you have higher income, you have lower tax rate. But this is not imposed actually. So that's why our example here is the VAT. Okay. So we have here forms of escape for the regressive with regards to the regressive income. So as we mentioned earlier, in the case of VAT, the taxpayer can shift this burden to the buyers. Okay. So we have here shifting, transfer of tax burden by the person whom it is imposed to another person. Example of our VAT. Okay, so shifting is peculiar only in certain forms. Okay, and these are considered to be indirect taxes. So that's why our example is VAT, percentage tax, and business tax. So we have here the forms of shifting. We have forward shifting and backward and onward shifting. When we say forward shifting, this is a form of transfer of tax from the factors of production until the burden is finally pressed to the consumer. Forward. Backward, transfer of burden of tax from the point of consumption on the factors of distribution to the factors of production. So this is the opposite. Okay, but what we are using actually is the forward shifting. Onward shifting is the series of shifts. Okay, so meaning shifts will be either 2 or more forward shifting or 2 or more backward shifting. So that's onward shifting. So these are applied to our taxes, indirect taxes. Okay, what about proportional? Okay, proportional, I think. Okay, what about proportional graduation rate? Proportional graduation rate is meaning your tax rate is equal to or that is based on your level of income. Okay, proportional. So those are the 3 graduated tax rate. How about tax capitalization? This is a form of backward shifting whereby the real taxes on properties sold are capitalized at the time of purchase and deducted in lump sum from the selling price. What is our example here? Sale of real properties where you have the savings, acquiring the property at a lesser price. From that savings, you have this, you will capitalize to pay your future tax obligations. Okay, that now you own that property because in our tax system, if you own the property, there are property taxes that you should pay annually. Okay, so we have, what about transformation? So this is effected through the process of production. So the producer whom the tax is imposed, fearing the loss of the market if he will add that tax to the price, so he takes the tax and recovers his additional expense by improving his method of production. Okay, so that's why he will have a lesser cost to compensate for the additional taxes. Because but this one is peculiar only in the production process, especially if you are a manufacturer or a producer. What about tax evasion? So tax evasion is the use of illegal means to defeat or lessen the payment of tax. This is also known as tax dodging. This is punishable by law. Actually, as a taxpayer, we are allowed some deductions, okay, to minimize our income tax. So there are there are items, certain items that is allowed under the tax laws that you can deduct from your income. Okay, but if you opt for illegal means of not paying taxes, that's tax evasion. That's punishable by law. What about tax avoidance? This is the opposite of tax evasion. So this is the legal way of minimizing your tax payments. So again, tax minimization. So there are items allowed for us to be deducted from our income to minimize our taxes. What are tax exemptions? Okay, so tax exemptions are a grant of immunity to particular persons, meaning there are persons or property or I think activity that are exempted from paying taxes, meaning they will not pay any taxes. Okay, for example, senior citizens, they are exempted. So what are the grounds for granting the tax exemption? Okay, so here, it may be based on the contract if that is stipulated. It can also be based on the charter or in the law that creates the corporation or entity or the transaction. It may be a public policy or tax treaties or agreements between two states wherein your country will not be taxed in our country, so your country will not tax our citizens if they are in your country. Reciprocal. Okay. So what are the equity is not a ground for tax exemption. Okay, when your neighbor is exempted, you cannot claim exemption on that ground. Okay, so you cannot invoke equity because these again are based on these grounds. If that is based on the contract, law, public policy, or agreement, that's the only ground for exempting from taxes. What about tax amnesty? So here, this operates as a condition of your tax liability. It is also construed strictly against the taxpayer. So when you avail of tax amnesty, the government cannot run after you for other deficiency tax. Once you avail of tax amnesty for certain tax period, then you are released from any liabilities or deficiency, especially if you are not able to pay your taxes for the moment. Okay? So that is tax amnesty partakes of an absolute forgiveness or waiver on the part of the government to collect what otherwise would be due. So again, tax amnesty was imposed especially during the pandemic for those I think businesses who closed, okay, their operations. So there are losses on their part. So I think they availed of this tax amnesty. Okay, so those are for our tax its elements and classifications.